So hi guys, this is SJ speaking, and in today's video let's see about CRR. So this is one of the monetary policies used by the central banks. Now in India our RBI uses this rate to do several things. So before going to the video, so I'm personally teaching trading. So if you want to join my mentorship course, you can contact me from the number below. I'm totally taking 7 courses. If you're interested, you can enroll in any one of the 7 courses and learn trading from me. So now let's go into the video. So what is CRR? So CRR refers to cash reserve ratio. So cash reserve ratio is the amount of money that the commercial bank might keep it as a reserve with the RBI. So in our India, the central bank is RBI. In other countries, it might vary. So to maintain the solvency of the bank, this is done by the RBI. So for maintaining CRR with the RBI, the commercial banks get no interest. So banks might get where this CRR is taken and given to the RBI means it is taken from the total deposits. So suppose if the CRR is 4.5, the current rate is 4.5 only. So suppose if the CRR is 4.5 percentage means the RBI must take 4.5 percentage from the NDTL, where NDTL refers to the net demand and time liabilities. I will explain what are these and keep it as reserve with the Reserve Bank of India. Suppose if the bank is getting around, if we are going and depositing our money in savings account, current account, and FD or RD. So this amount of money, for example, from that amount, 4.5 percentage is taken from the bank and it is kept as reserve with the RBI. So for keeping the RBI, it must have the banks must have a current account with the RBI. This money, this 4.5 percentage of money is maintained in the current account of the RBI. And what usually happens is that, so why the RBI does this is because to maintain the solvency, to avoid any liquidity problem. Liquidity problem means suppose the total demand is we are depositing around 1,000 rupees. There is a total NDTL in the bank. So if the bank's business is taking the deposits and lending as loans to the other people, to the businessman, corporates, and other people. So it lends by taking the deposits and lending. Suppose if it lends all of the thousand crore, so take it as 1,000 crore. If it lends all of the money, and suppose there is withdrawal the next day or the same day itself for 100 crores, there is no money in the bank to give to the customers. So this is because on the demand of the customer, the bank is liable to pay the amount, but there is no amount there to give. So this is the liquidity problem. So in order to avoid this, the RBI put certain ratios such as CRR ratio and SLR ratio. So both these has to be maintained as reserves. So SLR means it is maintained in the bank itself. So CRR is maintained in the RBI. So I will explain SLR in a specific different video. So only that the remaining amount, for example, I take it as this 4.5 percentage and the SLR amount it goes to around 200 means the remaining 800 only is given as loans. The remaining 200 is in the bank. Whenever there is certain, if someone is asking deposits for 150 crore means some amount of money is with the RBI and some amount is still kept as reserves in the bank itself. So bank that take that amount and give it to the public. So there is no any problem. So in order to avoid this, in order for the safety of the banks, in order to keep them liquid, in order to keep them solvent, in order to avoid them from becoming bankrupt, so the bank does this. So for maintaining the CRR with the RBI, whether the banks get any benefit, no. So the RBI doesn't pay any interest. So this is usually bad for the banks. So you might also say find the same scenario with the reverse repo, that is reverse repurchase agreement. In that case, the banks give some collateral to the commercial banks such as government approved securities and other stuffs to the, and the commercial banks give their money with the RBI. So since the money is safe and secure of the RBI, and they are also getting the interest from the RBI in that reverse repurchase agreement, reverse repo, based upon the reverse repo rate, the banks get some interest and that there is benefit. But here for the CRR, there is no interest. So this is bad for the banks. And usually, if the CRR increases, the less only few money can be lended to the public, and the bank's profit might decrease, which will lead to a slowdown in the business of the bank, and it also affects the money supply. I will explain later. Before that, let us see what is the NDTL. So who determines the CRR rate means the RBI, the nations, the country's respective central banks determines the CRR rate in the monetary policy mean. So in other countries also this cash reserve ratio is there, but it might be in different name. They might keep different names for but in India, this is known as cash reserve ratio. So let me explain what is NDTL. So net demand and time liabilities. So net demand and time liabilities. So demand time. So demand deposits time. So demand and time deposits. So this is demand deposits and this is time deposits. So demand deposits means it is current accounts and savings account. Time deposits means FD and RD. So this alone doesn't constitute NDTL. So net demand and time liabilities also include. So these are liabilities to the public, liabilities to the public. But there is also liabilities to other banks. No. So for example, take so this is for around 400 crores is there, and FDRD is also for 400. So totally 800 crores. But in addition to this 800 crores, there is also other stuffs which I will explain. 1 minute. So there is 800 crores worth of demand and time liabilities. In addition to that, take for example, there is SBI here, and there is Bank of Baroda here, and there is Canara Bank here. So Canara Bank has deposits of worth 300 crore in SBI. So and SBI has some deposits in other banks such as Bank of Baroda. So 100 crores. So this 300 is liability for the SBI. It has to repay back to the Canara Bank. Whereas this is asset for the Canara Bank, this 300. Whereas here this is the SBI has deposited 100 crores in BOB. So this is liability for BOB, whereas it is asset for the SBI. So SBI, take it as the SBI has this NDTL. So NDTL is SBI. So suppose if the SBI has 800 rupees, so only we are calculating the liabilities. So we have to add the liabilities and subtract the assets. So 100 is assets for the SBI and 300 is liability for the SBI. So 300 minus 100 means, so 200. So 200. So 800 plus 200. So this 1000 is the NDTL. So another scenario which I will explain here. Suppose take this value as 100 crore and this value as 300 crore. In this case, you have to add 100 and minus 300. So net totally minus 200. So 600 is your NDTL. So liabilities has to be added, whereas assets has to be reduced. So the net liabilities is liabilities minus assets. So formula. So suppose if you take it as formula, you can note it as net liabilities is equal to liabilities minus assets. So totally the NDTL is 1000 in the first scenario. In this case, it is 600. So let's take the first scenario as 300, 100. So in this case, the total net NDTL is 1000 rupees. From the 1000 rupees, this 4.5 percentage must be taken. So so you can calculate. So 1 percentage means 10, 4 means 40. So you can calculate. So you can calculate and see the value, and then you'll see that amount has to be reserved with the RBI. So in order to this is for the safety of the banks, and the remaining amount can be given as loans. So this is the NDTL. So how the money supply is controlled by using the CRR means, suppose if the CRR rate increases means, if the CRR rate increases means, what happens is that more amount of money must be reserved with the RBI. So there is less money to lend to the public, and usually if there is less money to lend to the public means, then the bank's profit will decrease. So bank's income will decrease. In order to compensate with that, what the banks does, they increase the interest rates. So the customers who are borrowing, they might find it unattractive and they find the loans expensive and might avoid to borrow from the bank. So their purchasing power, their spending power decreases, and so the demand for the products and service decreases. So the value of the goods and service decreases. So automatically the value of the goods and service, that is inflation, decreases. So there's another scenario. If there is less money to lend to the public, in order to have more money, the banks encourage other customers to deposit in their banks. And they also increase the deposit interest rates in order to attract the customers for depositing into their savings account or FDs or whatever is that. They increase the savings interest rate from 3.5 means they will increase to 4 percentage, or FD rate 6 means they will increase to 7 or 8 percentage. So the customers will find it attractive and deposit the money. They started to less spend and invest more in the savings account or in the FD. So the deposit interest rates also increases if these kind of rates increases. So this is another scenario. Suppose if there is deflation, so there is no money supply in the economy, and deflation occurs. Means in deflation also is bad for the economy. So I have posted a video regarding deflation in one of my videos. You can watch that if you're interested. So deflation also is bad for the economy. So in order to recover the economy from deflation, in order to increase the money supply, the CRR rate is reduced. The CRR is decreased. So see, once the CRR decreased, there is more amount of money for the bank to lend to the public. So the banks also reduce the interest rates, and so many of them would find it attractive. They find the loans cheap, and they would borrow more money from the bank, and the lending process increases. And if they borrow money, they spend it somewhere else, and the spending, public consumer spending increases, and the money supply automatically increases, and the market is recovered from the deflation process. So this is how the deflation and inflation and the money supply is controlled by altering the CRR rates. So this is what CRR means. In my next video, I'll explain about SLR, that is statutory liquidity ratio. So hope you have got a good clarification about what is CRR and what is the NDTL and all the several things. I'll also bring a specific video regarding the NDTL, so net demand time liabilities. So my channel is not only for trading videos, it is also for banking and other stuff, financial, commerce, economics, whatever related to finance. So if you are preparing for any IBBS or RBI or SBI exams, so my videos will be useful. And if you are opting for a career in the financial field, my videos will be useful. If you are doing trading or investing, my videos will be useful. So there is also another channel known as SJ's Trading School Tamil. So if you want to listen to my videos in Tamil, you can watch that SJ's Trading School Tamil channel. So apart from that, if you want to learn trading from me personally, you can contact me from the number in the scrolling below. So I'm taking 7 courses, so regarding technical analysis, fundamental analysis. So you can get them separately as well as together, all of them in the same package together. So 7 courses, you can enroll in any one of the 7 courses if you're interested. So other than that, if you want to open a trading or demat account, I am giving you Zerodha and Ally's Blue link in the video descriptions, in all my video YouTube descriptions below. You can open online account and start trading or investing from today onwards. So thank you guys. I'll visit you on my next video. Until then, bye bye. Take care.